how's everybody doing? This is Sergio Sais with the Real Estate Hedgehog podcast. This is the first one of the year. Today happens to be January 9th, 2023. I hope everybody had a great New Year's. I know that for Sam and I, we were looking forward to having a great New Year's, and we just ended up being sick over the New Year's holiday. But thankfully, we both got over it, and we're ready to just, get into this new year. It's going to be a great year. Sam, how are you doing? I'm glad I know for a while that you even lost your voice, so we couldn't even record a week
Oh
ago.
yeah, man. I got sick right at the night of New Year's Eve. I started feeling something scratching my throat. By New Year's Day, my voice was gone. In fact, it's now 9 days into the year, and I'm only about 90% back. My voice is not fully back yet, and it's a weird one. I tested for COVID. It's negative. I
Yeah.
tested twice even, and similar symptoms, but this one had a lot of coughing, a lot of dry coughing. My friends tell me they lost their voice too. So I don't know what it is, but it's going
I
around.
got sick on Thursday. So New Year's Day was Sunday, New Year's Eve Saturday. I started feeling poorly on Thursday and didn't start feeling better until almost last Thursday, this past Thursday. So it was with me for about 7 days.
Yeah,
But
same. It was with me for a while. Yeah, I don't know what it is, but you know what? Maybe it's good because hopefully, if everything holds true, you're good for at least a year. You know, it's in your system. You got it out at the start of the year. You can just rest assured this whole year you're safe.
excellent, excellent, excellent. Well, I'm glad that we're getting together. I hope everybody's kind of catching these podcasts. And I know, Sam, you've been putting out some little shorts, right?
Yeah, I had been putting out some little shorts near the end of last year. They're usually 5 minutes or less. I think it's good to kind of put out these little reminders because these are like key little facts or fun facts to kind of keep in the back of your mind when you're going out there and trying to invest. These are basically kind of the foundations of long-term investment. And I know some of our podcasts are long. It's more in depth, but those are kind of the core things we want you to get out of them. So I extract them out and put them out, and hopefully people enjoy it. There'll be more to come. I'll keep on putting them out. And then, of course, we'll have our more in-depth podcasts.
Yeah, excellent. So this is number 46. And it's, of course, we would have started earlier if we hadn't been under the weather, but number 46, I'm so glad to get the year started. And even before we get started on our conversation, because I think it's going to be really interesting, I want to remind everybody that we want to start having our Zoom meetings once a month. And they usually last about an hour. We're going to start doing them on the first Wednesday of every month from 7 to 8 p.m. So on the newsletter that we just sent out, which was kind of like sort of an introductory newsletter to the new year, really it's all it was. And we are making some changes to the newsletter. So I hope you guys find that helpful because we really want to get more in depth into some of these topics, the topics that sometimes we just kind of touch on. So that's going to be coming also. But for today, it's interesting that Sam, both before we even talked today, we were both starting to work on the same thing for this year. And that same thing is getting ready for tax season because the tax advantages are one of the big reasons why people want to invest in real estate. And so, Sam, what were some of the things that you were prepping today? And then I'll tell you some of the things that I was doing.
Well, actually, I actually started even earlier. So this is the first time I've really paid attention to all the nuances of taxes. And that's because, as you know, as you start to invest more, you want to take advantage of all the incentives that tax rules have to offer to an investor. So knowing that everything you do in a certain tax year, it's good for that year. I started working on my taxes back in early December, and I did a preliminary prep of all my profit and losses and stuff. And I got it done probably the first week of December, and I sent it over to my CPA for review in anticipation that we'd talk about if there's any last minute moves I could make to take advantage of all the taxes.
Mm-hmm.
Fast forward last night, I'd been sick for about a week or so finally had some energy, put the kids to bed. There's always last minute stuff. Today was their first day back to school. I was up late last night going over my taxes again, and I go through a spreadsheet to see all my expenditures, all the income, and this and that. And like anything else, every time I go through it, I always catch something. It's like, oh man, I missed this, or I added this too much, or this should have been over here, or it's the wrong month. And to some folks, they might think, oh, you're going too far into it. But believe it or not, it's best to be more detailed in your tax preparation, because should it ever come to be that you need to prove what you did, you want the timing to correlate as accurate as possible to show that you did it in very good faith, right?
Right.
So for me, I purposely write a lot of checks out. I try not to do any other form of transaction too much because it leaves a paper trail.
Okay.
And as I was doing it, I thought, oh, the numbers just don't add up right. If I'm anticipating making this much money, where'd the money go? Because I don't see it in my account. And then I remembered I have a couple of other checkbooks that I had to pull out last minute when I couldn't find my regular checkbook. And I flipped through them and I saw some other checks written throughout the year. And so I went back and worked on it. I'm not 100% done, but I think I'm about 97, 98% done. I'm
Oh,
hoping to
nice.
be done. Yeah, I'm hoping to be done probably by next weekend at the latest, possibly middle of this week.
Right.
And when I say I'm done, for the listeners out there, I still have a job, a regular job, a W-2 income, which I need to get my W-2s to get that done too. And then my wife works as well. But I'm speaking primarily about the investments. I've gotten that 98+% done, maybe 99% done. As soon as
Right.
that's wrapped up, the W-2s might come in the last week of January. I'll send it off and see where we go. How about you?
Excellent. Well, so today, the same thing. I was going to start about a week ago. In fact, my plan really was to start right around the end of December, kind of like you. But of course, with the holidays and, Christmas and everything coming, and I wasn't too concerned. Okay, I'll push it off into the beginning of the year. And so just like I said, I got sick also, and the beginning of the year wasn't a whole lot of fun. But so today I said, okay, today's the day. And I had a plan to do a certain amount of work. And the reality is that I only got one property done. But that's okay because it got started. And
Yeah.
here's a couple of things. I mean, one of the things that you do is you obviously you go through all your bank statements, because one of the things that sometimes people forget is that if you have which you should have, a checking account, maybe even a savings account, but definitely a checking account dedicated to each property.
I agree. Yeah.
Because you don't want to mix monies. That whole thing just does not work. And there are always fees in those checking accounts of one form or another. So it's a question just looking through those checking accounts, the statements, figuring that out, pulling that out. Another thing is your insurance. It depends again. If you have the insurance payment impounded, then you have to wait for the bank to give you that information. I have a mixture. Some of mine are impounded for specific reasons. Others I have chosen purposely to pay the insurance bill, the property tax bill, things like that. So it's things that you have to kind of make sure that you have a copy of that document.
That's funny you say that, man, because I'm in the same boat. I've got a couple of properties that are impounded and the rest I pay. But what
Yeah,
I do is on my spreadsheet, I lay out all the tax payments.
right.
But then I have to go back and erase the ones that are impounded because there's an escrow that's already there.
Right, exactly. And then the other thing is that I too, like you, keep a spreadsheet, and it's always great to keep a spreadsheet because you can see you set it up properly on any given month where you're at, and you can actually even project towards the end of the month. And so if you know that you've got some sort of CapEx expense that's going to come up, or even if it's not a CapEx, maybe a property manager has already told you, you know what, we're going to need a new wall unit, air conditioning wall unit for the summer for this. Okay, you know what, and you can start projecting expenses, and so it's really good. So the trick for me has been to take those receipts that I have, those statements that I have, and then match it up with the spreadsheet. Because just kind of like you, I'll look at my spreadsheet, I'll look at my receipts, and then I'll pick one up and I match it up with the spreadsheet. And every now and then there's one that's just not there. I go, oh, dang, what happened here? How could I have forgotten? But you know what? That happens during the course of the year. And I don't see a problem with that at all. Only because if you have a system where you have controls that will catch that, and it's a simple control, look at it at the end of the year, match it up to your spreadsheet. Oh yeah, here's the receipt, and here it indicates that I deducted it from my rents that I received. So yeah, so I started doing that today with one of the properties, getting all the insurance and all the repairs. And then the other thing that I do that, which you kind of alluded to, which I'm so glad you did, is that you kind of alluded to the fact that you want to make sure that you have the information broken down as much as possible, because that really does show a good faith effort in your record keeping and in the management of your property, so that you can also say, well, I've spent this much time, especially if you're a professional investor, I have spent this much time. And when they look at the work that was done, they can say, okay, I can see that you actually did spend that much time working on this. And so one of the things that I will do is that, especially when I have repairs, I'll separate out the labor from the supplies. So I'll have a category, I'll have a line item that says repairs. And on that one, I usually only have what the person charged me for that actual work. And then they'll almost always list, oh, you know what, we had drywall or piping or whatever they had to buy to do the repair. And then I pull that out and put that under supplies. So that, I mean, it all adds up to the same thing. But when you can show that, I think that really helps to flesh out your spreadsheet. And then if that ever becomes part of a trailing 12, the buyer, when he asks you for the trailing 12, you can show him, yeah, you know what, I actually track all of these things so that they feel comfortable with what you're saying are the expenses, and you're not trying to.
Oh no, man, that's impressive. I don't go that far to do that, but I do something else though, because kind of like what you talked about just now, how much time and effort you put in. I do track time. So I have a ledger. It's a calendar book that my wife bought me, and every time I do something, I put a little notation on there. I went over here to do this. I went over here to do that. And I know exactly what the mileage are for every location I go. So that's already known. And then I have a little tally book at the end of the year where I tally how many times I went to a certain location. I just multiply the mileage. I know the exact total mileage for that year spent there. But on that ledger, I also notate how much time I spent approximately. So that's the one thing that I'm going to try differently this year. I'm going to talk to my CPA to see how is that valued in the IRS's eyes, my personal time, not just the fact that I'm an investor spending time, but is there a monetary value that I can get back based on the time I spent? For example, if let's say I spent 4 or 8 hours 1 month actively managing, cleaning, maintaining, going to check or oversee a property, what does that equate to as far as, are there any tax codes that would, incentivize me to keep on doing that, or should I not need to do that? So that's the only thing that's different for me this year.
I think that's such a great idea. I had never considered that.
Yeah.
I think this is why these little conversations are so good, because you pick up on stuff. I'm going to start doing that then for this year, tracking time also.
Yeah. And it's easy, because you know what I do is I list the primary location that's on my ledger. Right. And then I just do like a grid. And as I go, I flip from month to month. I'll put a mark, a little hash mark, 1, 2, 3, 4/5, 1, 3, 4/5. And at the bottom, this area went 21 times that year. This area 17 times this year. All the way from January to December. Each one has a known value for the mileage. I know it's 60 miles one way to this location. And so it all gets added up. Obviously, the reality is, I try my best to run an errand in such a way where I continuously do a loop. But for the sake of easy visual aid, especially for the IRS's eyes, they know that I've been to these areas, and this is how far it is from my starting point. And I just add it up, and I know exactly how many miles that was spent that year on, the investment. Right.
And then the other thing is, if you are self-managing a property, I think that probably could be very helpful. And I'm glad you said you're going to check with your accountant, because I mean, for example, like I pay, like I have some property managers. I know you have a couple of property managers too. And so we pay them a fee so that we don't have to be out there doing certain things. But I'm wondering if you can charge off
Oh, you
a
can.
certain
So I know
amount.
that for a fact.
Oh, okay,
So you can, even though you hire managers, the mileage that you spend in order to maintain your business, it's still written off. You can
right.
write that
Well,
stuff off.
the mileage, yes, but what about the time?
Oh yeah, the time is the one that I need to get clarity on, and I'll
That's what I
find
was
out
asking
soon.
about.
Yeah.
Yeah, no, I understand the mileage part of it, but I'm thinking if you are self-managing a property and you go and it takes you 2 hours to go do a certain thing, whether it's showing the property or fixing something that's busted or what have you, or cleaning something out. I mean, I would think that there's
I
got to be
believe
a
you
way.
can because it all depends on how you set your business up, right? So,
Right,
for example, I have managers that manage the majority of my assets.
right,
There's one that I personally manage, but all of these assets are managed by me under an entity. So that entity that has all the inputs and outputs can also pay me directly, not the entity, but me, almost like an employee of the entity.
right,
The time I spent, for example, I went to go maintain a place. You always there's that lingo that they use. You want to charge fair market value, right? Fair
right.
wages. So if
Mhm.
fair wages is, let's say, for example, $25 an hour, and I spent 4 hours, then I can technically write myself a check for $100 for going over there to clean up the place, maintain it, de-weed it, whatever the case may be.
Mhm.
And I have done that in the past, and it's worked.
Excellent.
Where I write myself a check from that entity's account directly to my name, and in all my checks, like anything else in all stubs, I notate what that cost was for in the case there should ever be questioned, hey, what is this for? And
Right.
kind of like what you said, I don't commingle funds by any
No.
means. I have my W2 income or my other income that's what I use and I spend. And everything in my business income, the only time money goes out to anything other than the operational costs is reinvestment. That's it.
Right.
And like anything else, I know this is kind of going off topic, but I do feel that when you're starting out, you want to put every single penny back into the investment and basically compound it for the first several years to the point where you don't need it anymore, and then you can start really enjoying it.
Absolutely. So that's what we're doing right now. Right now, it's a time of gathering information. I mean, I'm going to be waiting for information from, I mean, my property managers out of state, they actually send me a 1099 indicating how much money they paid to me, as it were, which were the collection of the rents.
Uh-huh.
So that happens. And of course, they also send me, I keep track of all the expenses that they've charged me. So, I'm waiting for that. I'm waiting for the taxes from the the tax information and the interest information from the banks. So you're in the gathering
Yeah.
phase right now.
No,
And
I'm
then
glad you said that because I guess we run our business two different ways.
oh yes.
So you run your business the traditional way where you have the property managers take care of everything and they give you the end of the year 1099 spreadsheet.
Yes.
I'm the opposite, actually.
Okay.
I provide my managers a 1099.
Oh, how interesting.
Yeah, because the way I do it is, and there's no right or wrong, right? I've
Yeah,
done
yeah,
it your
yeah.
way in the past too. This new way, I've done it now with these live-in managers. They live on site. They
Mm-hmm.
take care of all the maintenance, collect everything. They notify me of everything. When things occur, they either pay for it up front, submit to me for reimbursement, or they just let me know and I pay direct, live time, real time. But their salaries, I give it to them at the end of the year. I have to generate all that for them because although they collect rent, they don't take their portion, their percentage off the top like a regular property manager.
Right.
They provide me 100% into my account. They go in to deposit all the checks for me. I pay them separately their management fee from my account. They don't take it off automatically. So therefore, I'm
Right.
providing the 1099. It's just a different way of running it.
Oh, absolutely. Yeah,
Yeah,
because you run it as if they are your employees.
correct. They're my
I
employees.
and I run it so that they're my contractors. And
There
I
it is.
think the
Yeah.
big issue there is that your property managers are living on site, where mine are actually companies that manage the property and collect all the rent, make sure that they got people in there, the whole thing. So yeah, just two different ways. And like you said, it's not wrong. And I wouldn't be surprised if maybe in the future, if I get a property big enough where I have to have a live-in manager, that property would be run kind of like you're running some of your properties. So yeah, no, that's excellent information. So okay, so that's the gathering part of it right now. And then what we're going to do is we're going to have another discussion later on in the year, maybe sometime in mid-April, early May, when we talk about, oh, how did tax season go? Because all we're doing right now is just gathering information. That's really when you find out. I mean, we kind of sort of know how much of what our cash flow was and what our return on investment is and everything, but it's not until Uncle Sam actually takes his cut.
Oh yeah.
And you don't know what that's going to ultimately be. But hopefully, if you did everything right and you're deducting or you're tracking all your expenses, your interest payments, and don't forget depreciation. Your accountant will remind you if you forgot about that. And when it's all said and done, the best of all worlds is to show a loss on paper and a gain in your checking account.
You know what? You hit the nail on the head. Mm-hmm. And all those things, if people didn't catch it, it is so important. Don't ever forget the power of depreciation in real estate. It's one of the only places that can let you do that. And kind of like what you said, it's a paper loss, but a gain in your account. And that's the magic of real estate investing, really.
Absolutely. Well, good. I think this was a great discussion to start off the year, because really this is what all of us people out there that are investors should be doing, getting ready for getting all of our information for the tax guy. I like what you said, Sam, that you call your tax man on a fairly regular basis to ask questions, discuss issues that have come up. And you need to do that because that way you can stay on top of any tax liabilities or possible tax liabilities. So great. Any final closing words on tax season coming up?
Well, it's the beginning of a new year. Traditionally, we always say you got to get your goals set up and have your vision for this coming year. But the reality is, I think it doesn't matter when in the year you can have a goal, and your goals change. So based on where we land in our taxes, it may shift our vision and goals as we move forward, because it will guide you on how to best, strategize for your next move. Because, sometimes it's good to hunker down, not because you want to or you have to, but because taxes dictate it. And sometimes it's good to go out there and buy something for a slight loss or a draw, because it would be advantageous to you because taxes dictate it. And, like they say, that's the only guarantee in life, right? Death and taxes. So
exactly. Well, that's such a great point that you just brought up. And we might make a video on that, on how you use money to not so much, or how to use an investment, not so much to make money, but maybe to mitigate or eliminate taxes. And that's another great conversation. And maybe we'll have that in the next month or two or three.
Oh, yeah.
So, okay, my man. Well, sounds good. I hope that you're going to be 100% by the end of this coming weekend.
I hope so too, man. Hey, but for the listeners out there, hopefully you like our content. You know where to find us. I'm going to put the link below, and you'll see it on our screen when this gets published. Hopefully you guys enjoy this 2023 that's coming up.
Excellent. Well, thank you very much, Sam. We'll be talking to you soon, buddy.
Okay, cool.